Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, that's where I dive deeper into all of these topics and subjects, looking for potential investment opportunities, sharing my strategies, sharing my portfolio and my holdings with everyone. And you can see me purchase companies real time, and I have a log of all my purchases that I've done over the past few years. I don't share the exact amounts, but I do tell people if it's a small purchase, a medium purchase, or a large purchase. So you can follow me and see what I'm doing real time. If you'd like to get better at investing, I think you can maybe get better entry points if you follow what I do and stuff like that. We have a discount code. Special is the coupon code that you can save if you'd like to sign up. 50% off the first month and a larger discount on the yearly membership. So we're going to start with, oh, hey, look, it's myself. I just posted it 1 minute ago. Gold supply projections coming in hot, eh? Question mark. I'm saying that as a joke. And what I put on here is identify the gold bull markets on the historical chart and project what is coming. So these were the bull markets. We had a decline in the 1940s, 45. This was on a fixed price standard. It was freely traded in 71, which was the interim peak, and it declined for supply or production. This was the mania phase in price for gold. We had a lot of gold come on in the world. We had another upswing in production from 1980 all the way to 2000. 2000, it peaked and turned over. Guess what we have coming up now? So this is Barrick Gold's supply forecast. They've got basically a production peak in 2020, 2021, and a decline. Now, I don't have the new forecast. This was put out a good some years ago. But if we get anywhere near this decline that they are projecting, this is just going to be a repeat of history and these decline rates when we get these big bull markets in gold. It will also come in silver as gold and silver move lockstep with each other. So it's something to look at. It's something to keep in mind. And I know a lot of people only look at charts in terms of the um, classical technical analysis that people post. But I also think that looking at the fundamentals like this is also a big deal. It gives you more conviction. I put some silver ratios up here. I haven't really talked too much about silver. I would say outside of the past week or so, I've talked a lot about it. But before that, I haven't really talked too much about it. I said, how about the silver to gold ratio? Everybody looks at the gold to silver ratio, but what if you switch them around? And then what about the silver to NASDAQ ratio? And what about the silver to the S&P 500? A lot of people, they look at few different ratio charts. I like looking at all of them. Does it mean that ratio charts are a predictive, that they have some sort of predictive function? I'm not sure if they are predictive, but I think they're a function of what the market conditions are at this present time. So I'll explain what I mean by that. So this is the silver to gold ratio. We've been at a very low ratio ever since we pulled on down from about 2017 onward. I had purchased a lot of physical silver in the 2018 era. It was cheap from a United States dollar perspective, and I think I had the ability to buy the most amount of variety for the cheapest premiums. The price was also in the 14s and 15s. It was really, really cheap. We had a dive bomb move lower in 2020, but the premiums skyrocketed. So the physical price of silver never really got there on this spike lower. The ratio never got to 120. The futures pricing got to 120, but I could never buy it at that exact price because the premium got jacked up during that time. But if you look, we're squeezing into the corner for a potential release to the upside of this ratio, and that's silver outperforming gold. And I do think that we will break to the upside at some point. I can't tell you exactly when, but this is a excellent time to be looking at silver as a potential investment. This is silver divided by the NASDAQ ratio. And I've shown this before to a lot of people on the website, this double bottom. And then when you get this kind of lead in, this pattern here, I call it the lead in pattern where you hit or bounce on a support and then come underneath it. Sometimes this is above it, sometimes it's underneath it. But this is a double bottom against the NASDAQ, and I think this will work its way on up as the NASDAQ rolls over. And that might still be some time out ahead of us. I'm not stating that this has to happen immediately. What I'm stating is at some point here over the next few years, we're going to see the silver price, I think, outperform the NASDAQ dramatically. And then we've got silver divided by the S&P 500, which is the same setup as the NASDAQ. You get that lead in, it's just underneath. You get a move lower, and then you get a double bottom. And we're right on the right-hand side of that double bottom. And again, I'm not stating that this has to move immediately. It very well could, and it does look very good. And it could maybe take some time. So I use these charts as an indicator of if something is cheap or expensive. It's expensive when you're up here for silver and cheap for the S&P 500. I would exchange my silver for the S&P 500 and ride it lower all the way to 2000 if you can time it, or maybe slightly thereafter if you break a downtrend where it becomes quite obvious. And here we're at a low point for silver. We're on the cheaper end of the scale. So I can't tell you that we're going to move immediately or not, but what I can say is that we're cheap, and that historically we bounce from overvalued to undervalued to overvalued. And I think we're going to get a bounce to overvaluation out in the future, not tomorrow, not in a year or two, but over time. And it could take some time to get up there, like 10 years even. And the double bottoms, this is the ideal buy for investor. In the technical analysis books, what we like to see is there's your kind of lead in pattern and then the double bottom. This can be slightly above or slightly below this point here. We come on and break this resistance line, and that is A, which is a good buy point, and then B, it retests this, which is another good buy point, and then we go into another move higher. So your downtrend, your stage one base, and then your stage two and stage analysis breaking out of it. So what I'm stating is that we're at this other double bottom there. That's where I think we are located. And right now, this is about as cheap as you're going to get from a ratio perspective of silver versus the S&P, silver versus the NASDAQ, and then the squeeze up of silver versus gold at a very, very low ratio, dating all the way back to 1970s when it was freely traded. You can see there was one time in history that it occurred in 1990, early 90s. There are other things when you start to look at all of this data that also align with these movements. Like there was bottoming that occurred in 90 and 91, 92, 93 in other asset classes, just like silver, that moved in lockstep almost with silver outside of maybe the 25 or 2011 high. They peaked in 2005 or so in 2006. Other commodities. So it's not just silver, but there's a bunch of other commodities that are trading with silver. James Ender says, I don't post it much because it has compounded so embarrassingly, laughably large. The 1980 Shadow Stats silver price high is now $1,349 an ounce for silver. I cannot fathom the ripoff. Hence, there will be no security nor equity without free silver. And that's the 1980 high when it is accounted for during with the shadow stats inflation numbers. So I talk a lot about some of these prices, and a lot of people talk about where potentially silver could go. This is the adjusted silver price, which is basically at all-time lows here. And You can also see how this thing has fallen. There's also some Elliott wave type analysis that you could do on this, but um, you're at really cheap levels. No matter how you look at it, no matter how you adjust it, it's cheap. Now, are we going to get to this price? I don't know, guys. I'm not claiming that I know that we're going to go to some ridiculous level like 1,349, but could we go multi-hundred? We could. We could easily do it. And it all depends on what occurs in the markets. If people get scared, if people have problems in the market obtaining physical silver, industry could get scared too. And not a lot of people talk about industry, but industry could get scared and just start buying mines. They could be buying it directly from the source. They could be buying the mine itself. They could go into mining for all I know. Silver most likely breaks out versus stock markets after they crash. This also requires aggregate of market participants realizing stock markets are entering a prolonged bear market. This is how a proper capital rotation takes place. And I would agree with that. Gold and silver outperform, they're called a, well, gold is called a safe haven asset. The reason it has garnered its name of safe haven is because it goes up when the yield curve starts to uninvert. The yield curve starts to uninvert when unemployment rate goes up and when we see the stock market generally roll over. So, are we going to get a rollover of the stock market? Well, maybe. I mean, we'll have to see. And you can also see here that you've got that same double bottom that I had on there above. And this was the big bull market in the 70s here. Here's your downward move and then the double bottom. You can also see that momentum is starting to potentially break higher. We've got gold and silver miners track silver's momentum that he has there, and I think we're coming into a bull market over the next, I think we're starting one right now or have started one. I think it bottomed in 2020 for most commodities. I think we're going higher in silver. When the right market condition hits, this thing's going to rip. Um, I prefer to be a little bit early and just sit in there, get my pickings of what I want from physical silver. We're starting to see premiums come back, which are really low on the premium side. I think it's a good time to be looking um, for a variety of things. That's what I would do. Here's Tavi, and again, I'm sticking to the silver theme in the beginning here. I followed silver for a long time, and today's price action caught my attention. From my experience, silver often behaves in unexpected ways right before a major move. If you ask me, we are likely on the verge of a significant move back to its all-time highs. This is not the time to get discouraged by daily price swings, in my view. And there's that big cup and handle. He doesn't have it on logarithmic because it would bring this up logarithmic wise. We're starting to move higher. So I don't know how more bullish you can get. I think the market conditions are good. I think there's other things in the background that I look at that are also bullish that I share with the members, but maybe I won't share here. That also correlate with how well silver looks. The Bitcoin therapist. This is funny. So these guys are all maxis. These Bitcoin maxis. I'm not a pro Bitcoin. I don't really trust it. I don't like it. Doesn't mean it can't go higher. But listen to this. Plan B, who's this Bitcoin maxi, he says he transferred all of his Bitcoin to ETFs because it's easier to manage. What are your thoughts on this? Well, I can tell you my thoughts. A lot of people who trade with Bitcoin and have to worry about it and all the passwords and all that crap, it's garbage. That's what I think. And I think that he probably knows it's garbage. And that's why he transferred it to Bitcoin ETFs. it's too tough to manage. And he says, I have transferred my Bitcoin to ETFs. Yes, I know, not your keys, not your coins. But it is just easier for me to manage Bitcoin the same way as equities and bonds. Also, not having to hassle with keys gives me a peace of mind. I guess I'm not a maxi anymore. Yeah, it's too difficult. I agree with that. Here's some quotes. Voltaire says, history never repeats itself. Man always does. Then Charlie Munger says, there's no better teacher than history in determining the future. So history never repeats itself. Man always does. So Michael Saylor, I put this in here. Just I don't I read things. I listen to some of these guys, and I listen to it just for entertainment purposes. It says when you buy Bitcoin, you strengthen the network. When you sell Bitcoin, you weaken it. All right. So let me just figure this out. All right. A network is strengthened when you transact on the network. The network weakens when you don't transact on the network. So when someone buys Bitcoin, it means that you must have a seller, right? Every buyer is met with a seller. So how do you strengthen the network when you buy it, but you weaken it when you sell it? Wouldn't the number of transactions and a volume increase the strength of the network? So wouldn't you want both more buyers and more sellers? Wouldn't you want more adoption? So why does it strengthen when you buy it, and why does it weaken when you sell it? Um, wouldn't you say that Bitcoin gets stronger when you use Bitcoin? So I know I'm sure Michael Saylor's a pretty smart guy. I just read this and I'm sitting like I don't like don't wouldn't it strengthen if you just use the Bitcoin network? Like why is it being strengthened only when you buy it, and why would it weaken if you sell it? I don't get it. Anyway, I just wanted to make that comment. The Bank of England and LBMA have effectively defaulted on physical delivery of gold bullion, but you're using the tariffs narrative to hide that. What's more is silver bullion is next in line for default. And here's my question here, guys. And I don't know how this plays out. It's a question that I pose to everyone that's listening to this clip. What if you can't exchange for gold and silver, for physical gold and silver on the LBMA exchange? And what if you can't exchange physical gold and silver for paper futures prices, future market on the COMEX and some of these other exchanges? If you can't exchange paper for physical, what's the value of the paper exchange? And then I'm going to take it one step further that I don't hear a lot of people talk about. If you can't get the physical metal and you can't make an exchange for paper for physical metal, what is the value of that exchange? And what is the value of the paper being traded in those markets? And what is everyone following for the price of gold and silver and platinum? So stay with me. What if we default? The LBMA has, quote, defaulted on gold because it can't physically deliver the bullion. And it says, what's more, silver bullion is next in line for default. Well, let's say it actually defaults and they don't get any physical metals for exchange. Why would people still trade futures pricing, the paper pricing? Wouldn't we see a large divergence between the physical metals price and the paper price? So I'll say it this way. If you cannot exchange for physical metals using the paper price, and the paper market does not actually track the physical market, wouldn't eventually the paper market go to zero? And if the paper market starts to go to zero, what are we tracking on all these charts here? We're tracking the futures price. So my question to everyone is it possible that we get a default on the LBMA, we get a default and maybe even on the COMEX at some point, and a divergence occurs between the physical metals pricing and the paper pricing, and the paper pricing eventually goes to zero because there's absolutely no point to trade paper pricing? And if that were to occur, where would the money go next? It would go to physical. And then if you can't get physical as easily as we could have before, then they would run at the miners pretty heavily, I would think, because the mining companies should be priced off of physical metal pricing because that's what they sell. So is there a possibility that a divergence starts to occur at some point in the future between physical metals and the paper price? And when that starts to diverge, what occurs to the paper price eventually is the question that I bring to everyone. This is Make Gold Great Again. He says, breaking the biggest cup and handle formation in history ain't for the faint of heart. This is big balls territory. And you'll need even bigger to stay on the bull ride of a lifetime. I don't think you need bigger balls. I mean, we don't need big balls here. I think you just need to be relaxed and patient. We know these gigantic formations exist. We understand that they're having problems physically delivering this small, I call it a small circle of gold and silver that they recycle in the markets. It goes in one door, out the another door, and it gets recycled. It's known as gold leasing. And they just recycle it through the economy so everyone feels good. The problem is when you leverage up so much, that pool of gold that they're recycling through the system can't support the amount of paper contracts. And then eventually you've got like a whole bunch of paper contracts going after the same metal ounce. And then by just sheer statistics or happenstance, a small fraction of the paper says, give me the physical, and it just dries up immediately. So then the paper markets become worthless. And then the claims on the physical also, I think, would go down in value if you don't actually have the physical. So what exactly do you own then? A piece of paper? An ETF that has no physical? Tough to say, right? Isabel Net says Goldman Sachs forecasts a 3% average annualized total return for the S&P 500 over the next decade, significantly lower than historical averages due to the concerns about high equity valuations. That also ties up with the low valuations in emerging markets, commodities, and precious metals. So that's where the money's going to rotate, and we're going to get an undervaluation, or I mean, an underperformance of the S&P 500 because of valuations. You got that three-hump consolidation too. You like that, huh? Trying to buy silver at AP Max. Weird. I've never gotten this before. Probably nothing. It says, thank you for your patience. Your estimated wait time is 4 minutes. We are experiencing a high volume of traffic and using a virtual queue to limit the amount of users on the website at the same time. This will ensure you have the best possible online experience. Probably what they mean is we will sell you things that we have in inventory and we won't have to back out your order when we don't have it, maybe. Part-time. So I was talking about Bitcoin against some of these other ratios. Someone had posted down here this ratio chart of Bitcoin, which is one that this one. So BTC to gold, Bitcoin is set to severely outperform gold. He's got a shoulder, a head, and a shoulder. That's moving right there. He has a retest here. So we started going back and forth, a bunch of us online, and I'm sharing what those look like. He goes, I like it even more the other way around. This is BTC versus XAU, which is the gold and silver mining companies. It's a 10-year uptrend line broken. We broke to the downside. Now we're doing a return move upward. And he says, second monthly rejection at the highs, gold breaking out in all fiat currency pairs. While stock markets put in a major top, not looking good at all for Bitcoin. On the plus side, I expect 26, 27 will be an incredibly good year to buying opportunity for a pullback potentially. That's his opinion there for part-time trader. Eric Yoon, we'll keep going through all these. They are going to mark-to-market revalue their physical gold for Judy Schell's proposed U.S. Treasury gold bonds. So I don't know much about this. All I kind of follow are the charts. I follow the ratios, and then the news comes out later of the reason why they may do something. And this might be one of the reasons why. Judy is saying my proposal for a gold-backed treasury bond. And what I think is going on is that gold is advancing rapidly. We're in a strong move of gold. And I think governments and Federal Reserves and everything are trying to react to the move. I think they know with interest rates going up that the bond market it could be toast. So they're trying to figure out ways to link these two together where we have a legit money system. So that's something that people are sharing here. The dude, and there's that, yeah, the big move. It says, this is good, right? The silver squeeze is happening. The derivative price won't reflect it until it's too late. Godspeed, silver stacker. FXI, which is a developing global leadership, a higher high versus VGK would support the case a lower low versus the S&Ps. This is the iShares China Large Cap ETF versus the Spider S&P 500. We've got that double bottom, bottom one, bottom two. You break out of that double bottom, and then you get a return retest move. And that's exactly what we have. This is your lead in. You come up, double bottom, you have a higher low, and then you break out to create a higher high. And now we're in a new uptrend. So we're in a new uptrend of China versus the S&P 500. And this is some of the things that I talk about on the website of maybe we have a couple of stocks in the Chinese area that we could invest in that look pretty good. And I'm not talking about loading the whole portfolio in it, but there are opportunities that people might not be looking at or seeing that you can get at very low valuations and levels. And these are all of different ratios, all breaking out against them. That's FXI, so China versus VGK, China versus VPL, and China versus VWO, all starting to break out. Was there any organization that didn't get U.S. aid funding? My question is, where did U.S. aid funding originate at? It originated, obviously, from the government, and then they grabbed money from the Federal Reserve Bank. Now, the Federal Reserve Bank will be like, well, I don't know where this money's going. That's up to government. Well, the way they could create this was based off of the ability to print money from nothing. That's what we need to stop. That is your root cause. The root cause is the ability to print money from nothing, and then government being able to do whatever the heck they want with it. And then a problem is that all of that money that is created has an interest rate charged to it, which means that it is absolutely horrible to be loaning money at interest to a private entity that then collects all the interest on everything. This dude, how does this seem normal? Honest question. Hecla Mining down 10.5% in a single day. I think it ended at minus 14%. So how is this normal? Well, what I've responded with, Hecla wants to keep the longest downtrend going. It has been in a downtrend from 1968 onward, all the way down, all the way down. But I will say, if this downtrend does break, I do expect one wicked reversal move if it does break that downtrend. And I don't normally talk about individual companies, but somebody brought it up, and it's this little blip over here is the minus 14% day that it got. Here's YEP. Again, this is your XAU versus BTC, your double bottom in progress here, and a potential move higher. This is T+1 delivery contract for physical gold became T+70 days. And he's talking about a default. The Bank of England has already defaulted on gold. Not sure why this hasn't gone mainstream. Again, I just wonder why people would use the paper market at all at some point. Because if you can't get the physical, I don't know why it would be worth anything. So then what happens to the paper price? I mean, wouldn't it eventually go to zero if there's no reason to trade it? Like, what's the point of it then? QE Infinity says consumer sentiment inflation expectations. You got to go back 45 years to the Volcker days to see inflation fears this high. Truly unprecedented times. And what do we see? It's a double bottom. 2000's at bottom, and here's the peak. And then we have another bottom into 2020. And then the death of inflation consensus, we've gone up ever since that time. So your downtrend from the early 1980s, your downtrend was here. It did a big bottom in 2000 up to 2011. We had another double bottom in 2020, and now inflation expectations have broken out of the double bottom. Now we are moving upward in inflation expectations, according to the herd's charting. And we learned about some of these chart patterns here. Investment wisdom, it says a market downturn doesn't bother us. For us and our long-term investors, it is an opportunity to increase our ownership of great companies with great management at good prices. So, take these to heart, guys. A market downturn doesn't bother the best investors. That's when they load up. And that's where they get rich. Here's gold to Bitcoin ratio. This is a double bottom, perhaps. You can see I just threw that in there. I didn't capture that, but it's a double bottom, your lead in, and then the double bottom that I see potentially could happen. And that's the bottom is this guy right there. Debt-based collapse, says Market Sniper. It says U.S. household debt hit an all-time record high. U.S. household debt jumped by 93 billion in quarter four 2024 to a record 18 trillion. So U.S. household debt hit a record. My question then is, we can't go down. The system can't handle the debt going down. This here in 08, 09, this was a big problem. This is deleveraging. We can't have deleveraging. So the system can't survive a large deleveraging. It can't handle deflation. There'll be too many defaults. So they have to pump the system with inflation continually, and this has to continually go up. And if it doesn't, you've got problems. The BJ milkshake is not making any sense because I know for a fact that a certain industry that has moved back to the US because of the first round of tariffs imposed on China by Trump doing his first term. BJ milkshake has been slipping since the US aid funding cut, as he's joking. Nancy Pelosi stock tracker, we've got new notable politician trade alert. Representative Chuck Fleischmann just disclosed a new $15,000 buy of global uranium ETF, URA. Uranium is a key component for the transition to nuclear energy. Why is this notable? Well, he's the chairman of the Energy and Water Development Subcommittee. He sits on the Space Energy Subcommittee. He's the co-chairman of Nuclear Cleanup Caucus. He's the co-chairman of the Fusion Energy Caucus. He's the co-chairman of Advanced Nuclear Caucus, and he's the co-chairman of the American Energy Dominance Caucus. To be fair to him, it is an ETF, so better than an individual stock, but keeping an eye on it nonetheless. So there's some insiders potentially buying, inside government, I should say, buying some of the uranium ETF. Here's Eric Yoon. He says, simple math shows that the world is likely going to be in physical gold deficit going forward. Total world new physical gold supply per year is about 4,900 metric tons. The total China physical gold withdrawal is 1,450 metric tons. PBOC physical gold import per year is 600 metric tons. Total U.S. physical gold imports per year going forward, 1,000 metric tons. Total Indian physical gold imports, 700 metric tons. Rest of world central bank gold imports, 1,000 metric tons. Total Chinese gold accumulate account and insurance companies physical import, 600 metric tons. Total world gold jewelry, gold usage, 600 metric tons. And then almost 6,000 metric tons potential physical gold demand going forward. We potentially have 1,100 metric tons physical gold deficit going forward. That's your supply-demand balance according to Eric Yoon. We've got the manipulation of gold and silver. You can see this is clear-cut price manipulation and fraud. It occurred across gold. It occurred across silver, copper, oil. It hit all at the same exact time. So they're saying my bet is the BIS orchestrated it with the Fed BOE blessing since defaults on gold and silver contracts, physical delivery in the system must be postponed as long as possible. And this is Chris Martenson sharing this. I think he's a pretty cool guy. I like his work. It says, Dear at Real Donald Trump and Elon, I would like to call your attention to the ongoing systemic abuse of the gold and silver markets by Wall Street banks and insiders. I believe the CFTC and SEC should be scrutinized for their overt failure to oversee these markets. Thank you. And the clear-cut price manipulation and fraud. This is Matt Smith. He says recent analysis suggests that the unallocated to allocated gold ratio at the London Bullion Market Association could range from 20 to even 100 to 1. For every ounce of physical gold backing these accounts, there might be 20 to 100 ounces of unallocated paper gold claims. What's the worth of the paper gold claims then? They're worth nothing. So at some point when you get so leveraged that a small, minute amount says, give me the gold, it just wipes you out. And then you're left with a bunch of bag holders or paper claim holders that don't have anything to back it. Here's momentum structural analysis. I'm seeing a lot of top calling now in the metals. Look, that very well may be that for the short term. I touched on this last time. So, so give me a thumb up on the content, subscribe to the channel, subscribe to the website, specials that coupon code if you'd like to do that. And that's all I've got for today. So we'll catch you next time. This is Finding Value.